The precious metal bull snorts as silver roars to the upside. Gigantic third phase of precious metals bull is underway. Silver is roaring to the upside, leading gold, and the miners are confirming rocketing higher right along with silver. Naysayers, wake up. We are witnessing the unfolding of the third phase of a gigantic precious metals bull market. By Eric Dubin from the News Doctors or Silver Doctors. 1:35 p.m. Eastern Time, April 21st update. Back on February 11th, gold turned in a spike high of 1263.90 on an intraday basis. Though gold was able to move higher after that spike during March for a brief moment, there has been a visible pattern in the mid 1260s price level, serving as a no-mas price range, given that it's not surprising to see gold hit this morning, despite the fact that we actually made it through the COMEX Open before the miscreants acted. Silver has been on a tear and it broke away from suppression efforts earlier this month. Gold getting into the 1260s again is likely to approximate trigger for today's raid, getting both metals down as next week's COMEX contracts expirations approach is the ultimate near-term goal. The epic battle I discussed with my original article below is starting today. Jim Wyckoff over at Kitco is chalking up today's gold decline to profit taking, an upbeat U.S. jobless claims report that showed the lowest claims number since 1973. Wyckoff loves his headline informed reality. And a rebound in the dollar. The dollar's rebound came on the back of a morning swan dive, and it's a fact that Wyckoff and the entire editorial team over at Kitco have selective focus on the dollar. When it's possible to blame a gold correction on a correlated move, however tenuous the case, that is, the analysis we see, but when the correlation breaks down, as it has many times this year, that inconvenient fact is usually ignored. Critics like to accuse people like me as perma-bulls for gold, regardless of my actual critical analysis and forecasting record of publicly rejecting the insane hype that comes to my industry from time to time, e.g., the bonus start and end date formulation for cycles that was behind the bogus justification for last September's Shemitah thesis. Many were bleeding out. Rejection of the truly uninformed early June 2015 hysteria about Greece's debt payment schedule that had an analyst ignoring the IMF bundling option that even duped one of Tyler's over at Zero Hedge and many other examples. The Wyckoffs of this world, however, almost never fess up to manipulation of precious metals markets. The last time Wyckoff was forced to say anything of substance, admitting that gold manipulation is a reality, was the April 2013 raid, when over 400 metric tons of notional value of gold, and some of that was actual physical, was dumped on the over-the-counter market over a Friday evening through Sunday evening thinly traded session. That raid was so damn big it was impossible not to look like a retard or one to call that normal profit taking. Wyckoff, Dennis Gartman, and all the analysts and pundits in denial about the gold cartel backpedaled and called reality for what it was, lest they looked like fools. The mainstream is fumbling around today trying to come up with the next justifications for why precious metals sold off after the COMEX Open. Next week's contract expiration is the concern and immediate motivation, even if the Wyckoffs of the world say otherwise. Regardless, the precious metal bull market is alive and well. The global economy is rolling over, and the downturn has already washed over the United States. The lion's share of economic data already shows this. Even with massaged government statistics, the equity and bond markets are in precarious positions, giving high valuations, declining corporate profits, goosed earnings per share figures that have benefited from over 1 trillion in stock buybacks driven by cheap credit, driven by central bankers blowing multiple bubbles. The Fed is trapped and unable to normalize interest rates lest they break markets. This is truly a clusterfuck, and I'm only scratching the surface. The epic battle over the next few trading days is not going to kill this new phase of the precious metals bull market run. Wednesday, excuse me. Wednesday's trading session brought home some healthy profit taking and price management by the usual miscreants. The COMEX gold session was particularly aggravating to watch given the suspect pattern gold traced, with gold basically following the same pattern as the day before and held under the previous day's trading. The pattern match is unusual. Granted, this happened in many markets from time to time, but in precious metals trading, odd things like this happen nearly every week. That is not a normal market activity. The vast majority of the financial world doesn't even bother to take notice because most people in the industry, including retail investors, simply look at gold and silver on a closing basis for either London or COMEX trading. To my knowledge, there hasn't been a single occasion on CNBC America when someone has discussed the regularity these bizarre patterns occur in gold and silver. Go figure. CNBC journalists and producers are stenographers to power. A funny thing happened following Gold's COMEX aftermarket smackdown. Buying interest in this ongoing bull market reboot has reasserted itself yet again. Silver is all the more impressive, particularly given the major moves silver has made over the last couple of weeks. Yesterday's trading will prove to be a pause that refreshes. The sell-off in silver was productive because some of the speculative momentum that has built up over the last week was subsequently tapered. Last Monday, Jason Burak and I discussed silver's unusual trading with GATA's Bill Murphy in his Wednesday Midas newsletter. Bill Murphy reiterated silver continues to trade differently than it did for so many years. After filling its gap left from yesterday's COMEX close, the price went right back up and refused to take back off like it had done for what seems like forever until these past days. It's like a light switch was suddenly turned on. Light switch indeed. Now, as I type, we're deep into the Asian trading session, and gold and silver are flipping the cartel the bird. To say this is unusual is an epic understatement. This bull market is alive and well, and it has been many years since we've seen this sort of bucking, cartel attacks, and profit taking. An mountain absorption of a mountain of new contract issuance on the COMEX, which has the net impact of sopping up rising demand, but unlike similar periods, this contract issuance and new shorting is being met with even more aggressive long side buying interest. Soon, COMEX silver open interest will likely cross 200,000 contracts, yet we keep motoring higher. On next week, the COMEX silver trading calendar is loaded with significant contract dates. On Tuesday, May 2016 silver options go off the board. The following day, May 2016 mini silver futures last trade date. April 2016 20 silver futures last trade date. April 2016 1,000 ounce silver futures last trade date. We're setting up for an epic battle, and if silver keeps motoring forward, we may very well have an $18 handle on silver and smack in the middle of expiring contracts window. Buckle up, there's going to be fireworks one way or another. Tune into this weekend's Silver Doctors Weekly Metals and Markets podcast. I'll have more to say about what might happen next week. Doc and I will be interviewing John Embry from Sprott. It will prove to be an insightful and timely interview. Back on March 14th, I observed conditions that clearly indicate the gold to silver ratio was about to reverse from its extreme mid-80s level. I took some flack last month when I published Cartel Huffs and Puffs and Tries to Blow Precious Metals House Down. Nevertheless, I was proven exactly correct. Through the raid that we are witnessing now, silver will take a bigger percentage beating, but when we get on the other side of this nonsense following the completion of necessary repair time, the gold-silver ratio to start following as silver begins to rise faster in percentage terms than gold. Naysayers will scoff as they read these words, but within only about a month, the gold-silver ratio is going to start trending in favor of silver in a way that will add further confirmation to those that need further confirmation. That is, new precious metals bull market is alive and well. That was his statement from the week before. Now, silver is roaring to the upside, leading gold, and the miners are confirming, rocketing higher right along with silver. Naysayers wake up. We're witnessing the unfolding of the third phase of a gigantic precious metals bull market, and the vast majority of Western-based conventional financial world is absolutely clueless about this unfolding bull market. But by this summer, when the traditional summer doldrums go AWOL, there will be few naysayers. Traditional bull markets climb a wall of worry. With precious metals bull markets, we not only climb a wall of worry, but must slog through mainstream ignorance about true fundamentals and the existence of massive government-mandated manipulation. Nevertheless, this metals bull snorts on, and I hope it keeps snorting. Snort, snort, snort. Buck, buck, and jump. Alright guys, take care, keep stacking.